Hey there, everybody. Welcome to today's webinar. I'm your host, Brian Rogers. And when it comes to learning new things, you've probably heard the adage, starting is the hardest part. Well, that's often the case when it comes to options trading. There are many new concepts and strategies to understand, and it may take a lot of practice before a trader starts to feel confident in their decisions. So it's natural to feel anxious about making a wrong turn along the way, or even knowing how to begin in the first place. Well, take a deep breath. We're going to walk you through some of those early steps in the journey so you can build your confidence in trading options. Joining us is Bassem Zahili, a longtime options trader who shares his experience on YouTube. He's grown his portfolio from humble beginnings over the course of about 12 years, in large part thanks to options trading. Bassem is going to share some of his early experiences as he learned to trade options from getting ready to placing his first trade. So taming his emotions, which we all know that's difficult to do when trades aren't going his way, and overcoming setbacks in his trading strategy. So Bassem, thanks so much for speaking with us. We're really excited to get the conversation going. Now, before we dive in though, here's a trivia question for our audience. What percentage of options contracts expire worthless? So don't worry, Bassem, you don't have to answer that now either. And the audience, don't worry, we're not giving you the answer yet. We're going to reveal that a little bit later. But I do want to say welcome, Bassem, and welcome for joining us today.
Awesome. Thanks for having me. Excited to be here.
Oh, my pleasure. I'm glad you're here. So let's get started. So we're going to chat about some of the lessons you learned when you started trading options, but you've actually been trading them for over around 12 years now. So I'm curious, why did you start trading options in the first place?
Well, I first learned about options getting my accounting degree around like 12. Man, I think it must have been 14 years ago now. As part of your degree, you have to learn about personal finance. Part of finance comes with options. And as soon as I graduated, I started applying my knowledge to hopefully grow my portfolio and maybe kind of try to retire early. So I started investing in stocks, but I found the returns weren't up to my standards. I wanted to know, is there any way I can increase my return? So I started diving into the wonderful world of options. And I ended up, I think after a year of research and maybe hesitancy, I ended up selling my first covered call. And that was my first option strategy.
Nice. I like that retire early part. So you continued learning and improving your trading skills. Now you share your experiences on YouTube. What made you want to launch a channel and share your knowledge and perspective?
There's two reasons for it. One was the constant aim for other sources of income. So if you get enough views and subs on YouTube, you can get monetized and you get some ad revenue. But I found from my friends, colleagues, and families, I was getting the same questions over and over again. Like, what is a TFSA? How do I invest? The stock market is risky. So instead of answering the same questions, I decided there's like a clear lack of education we have in our Canadian education system. At least when I went to school, they don't teach us about taxes or investing or even what a mortgage is or what credit is. So I decided to make a YouTube channel, just basically everything about Canadian personal finance. It ended up growing into, let's say, 50% personal finance and 50% options trading. People were more interested in my trading. So half of my videos is just every week I film my trades live and I just release it for the public just to watch what I'm doing. And just to make it a little more easy for beginners and kind of ask their questions if they kind of want to jump in along with me.
Options trading might not be for everyone, as it does require a certain level of sophistication and risk tolerance. So, what sort of mentality do you think options traders need to be successful, in your opinion?
What I found, beginner investors panic sell. They think the world is ending, stocks will continually drop. Instead of panic selling and solidifying a loss or like realizing that loss and then not buying back in, I believe patience is one of the most important things. Everything in my mind, if you've done your research, if you invested in the right companies, if you made decent trades, if you hold off long enough, if you don't panic sell, if you don't crystallize that loss, if you have that patience, it should come back. You'll be able to make a better decision when you're not stressed or when you're not. It's that self-fulfilling prophecy. If everyone thinks the market will drop, everyone continues selling, and then the stock keeps going down and down, taking us to zero. But it doesn't happen that way. So for beginner investors, patience is probably the biggest thing.
Well, that's a great mantra, Bassem. Slow and steady often wins the race. So, now for anyone in our audience interested in learning more about what goes into trading options, make sure you check out our on-demand videos in Webroker. So, investors who aren't familiar with options trading often have the perception that it's too risky, which is not necessarily the case if you invest, the time to learn and understand the risks. What are some other misconceptions out there that you think investors need to consider?
The biggest misconception is you don't need a large portfolio to start trading in options. What I like to do is I'm a option seller. I'm not interested in buying options. I feel like my expertise is selling. So if you're selling, let's say, a cash secured put, you would just need the cash in order to buy 100 shares of that stock. If that stock is trading at $40, 100 shares of $40 would you'd need $4,000. And the biggest risk, the biggest thing that could happen to you is the stock goes to zero. However, if you've done your research, if you've invested in a decent company, I would say, you can start small and you don't need a large portfolio. One criticism I get on my channel is, a portfolio size of 500,000. People say I'm swinging a big stake. It's unattainable, but people don't realize 12 years ago, I started only with $4,000 when I first began my options investing journey.
Okay, well, you mentioned something about margin. Can you give us a little bit of maybe a 30-second to save the world answer in terms of what is margin?
Well, margin is when your broker kind of lets you trade more than the cash you have on hand. I've seen a lot of brokerages offer a 3-to-1 margin. So if you put in $10,000, you can probably trade up to 30,000. But you don't need to use margin. Obviously, the biggest investors, some like their returns come off of margin, but that is additional risk. You don't need to trade off of margin because that's if you do get margin called, that's how you lose your entire portfolio. But if you just play with the cash you have on hand, let's say you sell a cash secured put, you have $4,000, but if you have margin of 12,000, you don't have to use it all up. You have that available to you in case something happens, but I don't just because of the risks that could happen.
Okay, yeah, for sure. I know when I first started looking at options, I thought you had to be a super sophisticated day trader and you had to be glued to your chair and looking at your screen 24 hours a day. What would you think about that? Is there a major time commitment in trading options?
It's more of a passive income source for me. So I do have a 9 to 5 as an accountant and I just trade at lunch. I'm constantly in the market. I'm always checking because it's part of my full-time job. So it is constantly on my mind. But selling options or trading options, it could be weekly, it could be monthly for you. It doesn't have to be active at all. It could be as passive as you want. With options, there are something called leaps where you can do a 2-year option if you'd like. It doesn't have to be as active as day trading. I'm personally not an expert at day trading at all. I like to do 30-day options. So an example would be selling a cash secured put that expires in a month. It gives me more leeway. It gives me more like headspace to not be able not have to constantly think about it. If I ever go on like a week's vacation, I don't have to be monitoring my options trades on my vacation. So it's as active or passive as you make it.
Yes, yeah, and we all need our vacations. We know that more than any time now. So many novices, this is a good segue into that. Like many novice investors feel that are uncertain, I should say, or they don't really feel ready to place their first options trade. How knowledgeable would you say you would need to be before you, or were you, I should say, before you placed your first option trade? And how did you know that you were ready to start?
Um, to be honest, I was pretty nervous, even though I had the basics down. So, as I mentioned, I learned about the basics in my university degree and then further research on the side. But I found I was ready after joining a few like Discord servers, other communities of options traders. I would do paper trades on my own just to see what would happen and see if my plays were correct, if my options were profitable or not profitable. But if you just find, let's say, the most basic, which is what I recommend, let's say a covered call, if you already own 100 shares of a stock, the biggest risk that could happen when you sell a covered call is you lose your 100 shares, hopefully at a profit. So even though I was pretty nervous, I felt it was a relatively safe trade. And I had, a community of other investors kind of walking me through in case something bad happened.
Oh, excellent. All right, well, now take us, we're going to hop in the DeLorean and the time machine. Take us way back to those first options trades you ever placed. So if you can go back that far, how did you feel after placing them and how did you keep your emotions in check?
To be honest, I actually didn't keep my emotions in check. So I think I mentioned earlier my first trade was a covered call. So I had 100 shares of a dividend paying stock. It was earning me, let's say, 6% a year. I can't remember exactly. I just made that up. So I wanted to turn that 6% into 12. And I found if I sold a covered call on this dividend paying stock, I could earn another, let's say, 0.5% per month, bringing my total dividend in quotes up to 12%. The issue is when I first sold it, I was checking every like 10 minutes what's happening to the stock. It was actually more stressful than I thought because I wanted to be correct right away. Even though I sold a 30 day to expiration covered call, I was constantly checking like every 10 minutes. But I ended up it ended up being a profitable trade. So the trade did end up expiring worthless, but my emotions were kept in check by that community of options traders I mentioned earlier. They told me just to, you made the trade, feel confident in it, just turn off the charts and kind of let it ride.
Oh, excellent. I just want to mention that some members of our audience who might want a more hands-off approach to trading options can check out our webinar, How to Generate Passive Option Income on a Budget. But for those taking an active approach like Bassem, it's important to develop and stick to a trading plan with realistic goals. What did you decide was a realistic playbook to follow when you were starting out?
So my initial research was showing anything above 2% was a little too risky, 2% a month. I wanted to invest in trade options so that I could beat the S&P 500. I consider that the market, which makes 10% a year. So if I can't beat the market, then why am I trading options? I should probably just invest in like a global index fund and kind of let it ride. But I felt it was safe to do 1 to 2% per month. Anything more, I felt it was a little too risky. So I would kind of avoid those riskier plays, even though it is tempting to get 3, 4, 5% per month. It's not what I felt was safe for my portfolio and my trading style.
All right, well, following a trading plan can certainly help take the emotion out of our decisions, but that said, we're all bound to make some mistakes along the way when learning to trade. So I wanted to get into a few that you made early on in the lessons and the lessons you learned from them as well, Bassem. So one of the mistakes I know you and I have talked about previously was letting greed get the best of you. What did you learn in that situation?
I think that's the most common mistake I see investors make. So what happens with greed is, let's say you sell a 30-day covered call, and the next day it ends up being, let's say, 90% profitable. So 29 days left, you only have 10% of profit left to make, and you're like, hey, what could happen? This can't possibly go against me. I'm already 90% profitable. So what I would do in my early days, I'd let it ride instead of closing it early. And then I found something had happened. Let's say they release results. So let's say there's some macroeconomic event that causes all stocks to increase or decrease. So when I wouldn't follow my new trading plan, when I would just get greedy and try to get 100% profit out of my options, I found that most of the time I would end up losing. So the day before or 2 days before it expires, something happens and I end up in a losing position. What I found helps me most now is closing my trades at 50% profit and then rolling it out further in time. So instead of getting greedy and aiming for 90 or 100% profit, if you get 50%, you should be happy. That's my goal. That's my new rule. So I close at 50%, and then maybe I enter in a new trade, or maybe I roll out further in time.
Yeah, it's like that old adage that any profit is better than none, right?
That's true. No one ever went broke taking profit. Is that the saying? I don't
Yeah.
know.
Well, we'll make it official.
Yes, new saying.
Awesome. I like it. Okay, and along similar lines, another mistake you made was not having a specific exit strategy. So something you had in mind for your trade. How did you learn from those experiences?
So I try to learn some stop losses or exit strategies from more experienced traders. And what I found was most successful for myself and my group of friends or other traders was setting a stop loss at 3 times the premium earned. So let's say I open a credit spread and I made $500 of premium on that spread. My stop loss would be 3 times the premium earned, so 1,500. If the trade goes against me and I end up in a $1,500 loss, That is my stop loss. I close the position at a loss and I move on or I live to trade another day. One mistake I found was holding on for too long and letting it go to 5 times your loss or 10 times your loss, believing it'll come back and trying to be 100% profitable. Not every trade, your trading is not going to be 100% profitable. So if you end up losing on a few, you kind of have to cut your losses and run just basically to live to trade another day. So one of my rules now is 3 times the premium earned, if that makes sense.
Yeah, I like that. I like the saying too. That's pretty memorable. Live to fight another day.
There we go.
Sometimes novice traders take on more risk than they might realize. And this can cause them to, face significant losses. Like you said, you want to be able to continue on. They happened to you during the market crash at the start of the coronavirus pandemic. Can you share, what happened and the lesson you learned from it?
So that was a particularly rough time. I started trading in 2010. So everything I've done from 2010 to 2020 was successful. It's the longest bull run in history, I believe, 10 or 12 years. So I looked like a genius. I felt like a genius. Everything I did was right. And then when the market started to turn, my biggest mistake was not believing it. I would see stocks go down and I kept saying it'll come back. I kept saying it'll come back. I was at a $5,000 unrealized loss, then 10, then I ended up at a $20,000 loss. I kept thinking it'll come back, and that's when I realized, when the WHO declares like a global pandemic, and I thought I was smarter than them. I was like, no, it'll come back. This isn't real. I ended up cutting my losses, and basically what I said earlier, live to trade another day. So kind of, you have to realize that at some point, since I was successful in the last 10 years, you can't be profitable forever. It was a big hit to my portfolio. I believe that was a 10% loss in just a few days. I believe in 2 weeks, the market had gone down almost 50%, and I kept thinking it'll come back. I constantly wanted to roll. I wanted to be profitable. I want to show all my trading friends or all my family, like, hey, like I can still make money even though the market goes down. But you kind of have to realize when you should just cut your losses and run. So accepting a huge $20,000 loss was a big learning lesson for me in March 2020.
And I know I've experienced that too. You use the same approach for a while, and it may work for quite a bit of time. And like you said, with that bull run, it did give you that false sense of security, of, oh, this works all the time. But then you have to be able to adjust once that does change, right?
Yeah, it was hard. Like everyone has to experience a bear market or a recession once in their trading life because when everything goes up, it's not you making the right decisions. It's hard to make a bad decision when all stocks just increase for 10 straight years.
Yeah, yeah, for sure. Well, now, for the folks out there, if you're interested in learning about other ways to limit your risk, so now we were just talking about that risk factor. So when you're trading options, you can limit your risk, and there are some different ways to do this. So tune into our webinar on how I minimize risk as an options trader. The last mistake we're going to touch on is trading options on speculative stocks that you didn't actually want to own because the premiums were a little bit high. How did this backfire, and what did you learn from it?
So if you started trading in 2020, you would have seen a lot of SPACs, these like highly speculative companies. There's a lot of new like EV vehicle companies that are starting to come out. My big mistake, even though I said earlier that I don't do this, like I ended up doing it. I ended up trading, I ended up selling puts on a highly speculative stock. It was a small cap stock. I think it was under 10 billion. I think that's what qualifies as small cap, and I think it was earning me over 4% per month. The premiums were just so hard to ignore. I saw the stock drop 40% in a few weeks, and I was like, okay, I'm going to call the bottom. I'm going to sell cash secured puts at another 20% discount. It can't possibly go down that much, can it? Well, like obviously my luck is perfect. If I sell a cash secured put on a stock, it's going to drop the next day. The stock ended up losing one of their major revenue sources, like a major contract, and the stock ended up dropping 50% and then another 10, another 10. I ended up at a huge unrealized loss near the end of the year, and I was pretty unhappy. I ended up filming a YouTube video about it if you want to watch. I think I was down $15,000 in just a few weeks. So even though I was chasing those 4% premiums, I lost way more than that. So back to one of the earlier points, just don't get greedy. Don't get greedy.
Yeah, it always goes back to that, right?
Yeah, like one of the rules. I think yeah, I probably should have made a list at the beginning that says, only sell only sell options on stocks you'd want to own. So I like starting off with a cash secured put. And the worst thing that could happen in a cash secured put is you own the shares. If you own the shares, second worst thing that could happen, I guess, would be the stock going to zero. And I wasn't comfortable holding that stock. I only wanted the 4% premium. So lesson learned.
Nice, nice. Great lesson learned for sure. And thank you so much for sharing your early options trading experiences with us, Bassem. I think your perspective might help some novice traders get a little more comfortable starting out with options. And on that note, it can sometimes be intimidating to place that first order ticket. So let's hop into WebBroker, our TD Direct investing platform, for a moment and show everyone how to fill out that options ticket. All right, before you get started with trading options, you're going to need to know how to place a trade. So I'm going to walk you through how to do that in our web broker platform. So as you can see, I already have SPY pulled up as a quote, and I've already clicked on the options tab. That's where you're going to want to go to get the pricing. And I've already selected our expiration date. So you can see you want to look at what is the expiration you're looking for. So I've selected June 30th. And now what I want to see is what are the prices. So I can see on the bid and the ask, normally like a stock, you buy at the ask and you sell at the bid. So these two columns are where I'm going to want to focus right here. And then you have a little symbol. There's a hyperlink. This is going to help you place that trade when we get to it. And you have your strike price right in the middle. So you want to select your strike price either for the call or the put, whichever one you choose. I'm going to take a look at a call option today. So we're going to scroll down and we're going to find the strike we're looking for. Remember, you can filter up at the top here, but I do like to see everything. It gives you much more selection. Sometimes when you use these filter features, it does give you a limited number of strike prices. So do whatever you like there, but typically for this example, I'm going to leave it wide open. And we're going to scroll down, so you just want to remember the headers on these columns. We have the symbol, the bid, ask, the last, the change, and so on. But primarily, we're going to focus on these two right here. So as I scroll down, we can see that the green line that shows up is going to show us where the ETF is currently at. So it's in between $410 and $411. We remember on the left-hand side is the calls and the right-hand side is the puts. So if I decide to choose this $411 strike, it's an at the money call option. If we want to buy that, we would just click on the SPY symbol here on the left. It's going to open up a little dialog box where now I can press buy. So it's automatically going to populate that order ticket with that particular option. So you can see there's SPY, the June 30th $411 call option, and it already has buy to open. So I'm set to go, where I just have to put in my quantity. Remember, this is in whole quantities. This is one contract. I can enter multiples of, 2, 3, 10, whatever I like. Remember, one contract represents 100 shares. So this is one option. And I'm going to select limit. You want to be careful on using a market because they do move so quickly. And then I'm going to enter in my limit price. So I can refresh right over here on the right-hand side. I can see the ETF price at the top, but I can also see the current option price. And every time I refresh it, that's going to give me a real-time look. So right now it's at $11.52. I'm going to type that in. And you can put your good till day or a further time. I usually recommend doing it for the day. And then you're normally going to click on preview order. You can put in your trading password if you do have one. And then on the next screen, it's going to give you a summary and say that you are buying the one contract of the SPY June 30th $411 call option. Is this correct? Do you want to place this trade? You select yes, I want to place. And then it will go to the market, and hopefully you're going to be the new proud owner of this call option. Okay, so hopefully that clears things up a bit. Now it's just about time to head over to our live audience Q&A. But before we do, let's answer our trivia question from earlier. So as a refresher, the question was, what percentage of options contracts expire worthless? And Bassem, do you want to venture a guess?
So I'm going to say 90%.
Okay, well, yeah, that's a pretty high number for sure. And you're not that far off. But the answer is data from the Options Clearing Corporation, so the OCC in the US, suggests that about 23% of options expired in 2017. So we weren't that far off in the sense that, you said 90% might expire. But when you add in the other aspect that 70% were sold to close the transaction. So I think that might have been what you were thinking. There was only 7% total that would have been exercised. So I think you were probably thinking of that. sense, right, Bass?
Probably, yeah. That's exactly what I was thinking. Yeah, I'm not just bad at
No,
guessing.
you were really good.
Yeah.
Yeah, very interesting information, and I hope you guys enjoyed that trivia question. So let's head off to the live Q&A.